Good morning, ladies and gentlemen. Welcome to the FULCRUM Utility Services full year results presentation for the year ending 31st of March 2021. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Please just simply type in your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. These will be available via your Investor Meet Company dashboard, and you'll be notified by email when they are ready for your review. I'd also like to remind you that this presentation is being recorded. Before we begin, we would like to submit the following poll, and if you would give that your kind attention, we would be most grateful. And I'd now like to hand over to Jenny Cutler, CFO, and Terry Dugdale, CEO from FULCRUM Utility Services. Good morning to you both.
Good morning, and thank you, Mark. Good morning, everyone, and welcome to our 2021 full year results presentation. I'm Terry Dugdale, FULCRUM CEO, and here this morning with me is Jenny Cutler, our CFO. Both Jenny and I will be presenting the group's FY21 results to you, and I'd like to take this opportunity to thank you all for taking the time to join us this morning. So first, and before we head into the results presentation, I'd like to give you a brief overview about what the group does. And so that you can see the content of the slides in more detail, we'll now be turning the camera off just so that you can see more detail on the slides. So FULCRUM at a glance. FULCRUM provides essential utility services nationally, and that means we design, build, own and maintain utility infrastructure that powers the country. Our capabilities across utilities are incredibly broad and include specialist services too. And we use our group capabilities to provide new utility connections and infrastructure solutions to 4 key sectors. I'll talk you through each of these sectors in more detail later in the presentation. But in summary, we provide new multi-utility connections, which are gas, electricity, water and fibre for new housing developments. We also offer those multi-utility connection services for industrial and commercial developments. This includes the specialist design and installation of intermediate pressure gas pipelines, high voltage electrical infrastructure, and also electric vehicle charging connections. We have a strong and growing smart metering business that delivers smart meter exchange programs, but also manages and maintains both gas and electric meters. We also own and can adopt gas and electric infrastructure and can offer specialist maintenance services for new and existing electrical infrastructure, including solar farms, wind farms, and battery storage sites. So I'll now move on to our FY 2021 review and how we emerged stronger from the very challenging COVID-19 affected year. So I guess I almost don't need to say, but it's no surprise that FULCRUM, as most businesses, was affected by COVID. The year was extremely challenging for the group, and this was reflected in our financial performance in year, especially in half one. That said, we still achieved the performance that was outlined during the interims. With regards to the pandemic, we responded quickly and effectively, remaining operational where possible, and continue to make progress in the execution of our strategy. We did this while supporting our customers, especially with maintenance and connections to support the NHS and the energy sector. As previously said in my role as COO, we have challenges in changing our main culture from a predominantly gas business to that of a multi-utility connections provider, as well as increase our market share in all of our core sectors, while stabilising our business and setting those foundations for the future. Stabilising being the key word, because we've had several changes in the senior team and board over the last couple of years. As you'll be aware, I took over the CEO role in the final quarter of the financial year, and my key focus has been to further improve the efficiency of the business and to drive its future profitability. Now that I can see the full picture, our number one priority is delivering growth and profitability in our core markets, with specific focus on cost, margin and cash. We've refocused our efforts on strengthening the multi-utility capabilities of the business to achieve future growth in these core markets. And I'm really pleased with the improvements made so far, but we still have a little way to go. With regards to the order book, in the last quarter of the year, we adopted a refreshed and more prudent approach to how we value our order book, which effectively resulted in a 15% reduction in the value of the group's order book year on year. However, we now have a very robust view of our order book, which has grown following the award of several significant new contract wins post-year end. So if we go on to the next slide. So keeping the nation connected during COVID-19. So as you would expect, our priority was to protect our staff and to support their well-being through this very difficult time, whilst ensuring we had first-class communications in place with all of our staff, whether they were working or whether they were furloughed. Along with this, we also ensured that we fully supported our customers' needs. For example, ensuring essential maintenance in wind farms and in hospitals was completed. We also carried out numerous connections for NHS laundries and care homes, as well as any critical infrastructure that was needed. However, following the first half of the last financial year, the national lockdowns delayed the planned delivery of larger scheduled projects. And our smart meter and exchange programs were also affected, and they were still affected until more recently. Because of this, we clearly had to focus on our financial strength and needed to prioritise on cash conversion, general cash management, and the use of government funds such as the furlough scheme. Through this time, we also ensured we stayed on track with our strategy, expanding our geographies in this time too. For example, we've been growing into the southwest with increased new housing market wins. We've also increased our ability to deliver true multi-utility projects. The lockdowns also affected customer decision-making on the award of new contracts, with much of the significant investment and effort in time in creating the tenders not really being realised as sales until after year end. So our clear strategy to grow. So from Q4, we now have a very clear strategy to grow in our core markets, as we have relatively low market share across all of those sectors. And as I've said, we also have a very clear focus on getting the business back to profitability within those core markets, with a strong drive on commerciality as part of our core culture. Again, as I've said, we have low market share across all of our sectors, and this is our focus, along with driving down costs and further increasing profitability. We have a robust bid, no bid process in place, which ensures projects that are undertaken are cash positive and profitable, as well as ensuring that the terms and conditions are acceptable to us as a business. Our order book is strong but prudent, and we've selectively strengthened our operational capabilities by investing time in our people, creating and enhancing their multi-utility capabilities. We also have recruited top industry talent to join our existing business development and operational teams to support this growth. As part of our core markets, the UK's transition to a low carbon economy is absolutely key. However, we see this as simply as part of what we do. Our part to play, for example, in EV, is to design and install, which is technically just another electrical connection for us and is part of our core skill sets. That said, now we have clear sight on an increasing EV order book. We are creating a specific delivery team for this, but will ensure that the resource can be shared to absolutely maximise our operational efficiency. Another example is smart metering, which is a major part of transitioning to a low carbon economy, as well as an excellent opportunity to grow the top and bottom line, especially with the recurring revenues as a meter asset manager. We're also ensuring that we're integral to understanding the effects of a blend and a complete change to hydrogen from natural gas. And as part of the Independent Networks Association, we are currently talking to the UK government with regards to ceasing the installation of gas in new homes from 2025. We successfully completed the planned tranche of the asset sales to ESB and entered into a 2-year revolving credit facility with Lloyds. And as I've said, we have refocused the business on its core cash generating model. We've made excellent progress on our sustainability strategy, and we've initiated a sustainability program to cut emissions from our operations. We've also had excellent, with regards to the last section there, as I reported in the interims, we implemented a high performance behaviour framework to strengthen our culture, which has resulted in year with us being recognised by Best Companies as being named one of the top 10 utility companies to work for in the UK. So as we move on to the next slide, this is our net zero opportunity. And as I've said, this is effectively around our core skill sets. So if we look at the first section there, electrification of the UK, and this is excellent. We believe that we will see demand in the UK double by 2050. That's a need for a significant upgrade of the electrical networks. So where do we fit in? We can design, we can install, we can maintain. So we are perfectly placed to support the electrification of the UK. Demand for green and flexible energy. So again, this is where we see the solar farms, the wind farms, the battery storage. And although we won't actually install a whole solar farm or a whole wind farm, we will install, using our core skill sets, we will design, install and maintain the electrical network that feeds those. The EV revolution. We can see, as I've said before, we now have a good, strong order book for EV, which is growing. Where we fit in, again, as I've said, we see that as our core skill set. We've seen the growth and we can do anything from a low voltage connection to an extra high voltage connection. Smart metering. Again, there's still 29 million meters that need exchanging in the UK by mid-2025. Currently, that date's not moving. We have the ability to actually exchange and then maintain those meters. And we're actually seeing our existing customer base grow with their demand for increasing the amount of exchanges that they need to happen to meet that 2025 target. UK's hydrogen strategy. As I've said, we're working closely with the Independent Networks Association with regards to understanding where the future of hydrogen sits within the UK's net zero strategy. So I think I'll give my voice a rest for a second and pass you over to Jenny for the financial slides.
Thank you, Terry. So the first slide shows the financial performance of the group for the 12 months to the 31st of March 2021. As Terry has said, the adjusted EBITDA of 0.1 million was in line with the expectations set in our interim results, in despite of challenging market conditions. Group revenue was 1 million ahead of last year at 47.1 million, in despite of a 0.6 million reduction in revenue from the owned utility asset portfolio due to the impact of the previous sales of our domestic gas assets to ESP. Gross profit margin, excluding exceptional items, reduced from 31% to 25% year on year as the pandemic impacted our core markets. Mobilisation on projects was delayed due to customer uncertainty, and at the same time, our fixed operational costs continued. This reduction in gross margin, combined with an increase in admin expenses of 2.1 million, reduced our adjusted EBITDA from 4.5 million last year to 0.1 million this year. This increase in admin expenses is the result of investment in the group's in-house multi-utility capabilities, both people and operations. The operating loss of 11.2 million was impacted by 8.5 million of exceptional items. Firstly, we incurred an impairment on our owned utility assets of 1.9 million, following an external independent valuation of this portfolio. The valuation model used was based upon a combination of current market prices, the useful economic life of the assets, and the discounted future income generated by the assets. Secondly, the actual financial performance compared to previous forecasts for Dynamis and CDS, both acquisitions in 2018, resulted in an impairment of goodwill, customer relationship and brands related to these businesses, amounting to 4.9 million. And finally, the group incurred a further 1.7 million of other exceptional costs, including 0.6 million of employee exit and severance costs and 0.9 million of one-off legal and advisor costs, including the group's response to the proposed tender offer from Harwood Capital. The 1.4 million profit on sale of the domestic gas assets to ESP during the year includes 0.5 million of enhanced payments as the group met certain triggers for additional proceeds under this sale agreement. Moving on to the next slide. This shows that the impact of the exceptional items resulted in the majority of the 10.9 million fall in net assets year on year. Net asset per share fell from 20.8 pence per share last year to 15.9 pence per share at the 31st of March 2021. If we move over to the next slide, this shows the group's movement in net debt over the 12 months. The group has net debt of 1.5 million at the 31st of March 2021, made up of net bank borrowings of 5.4 million and cash of 3.9 million. The movement of 7.5 million in net debt over the 12-month period reflects an investment in utility assets of 7.7 million, offset by the net proceeds from the sale of assets to ESP of 3.9 million, less the cash outflow from operating activities and leases of 3.4 million. And the final slide from me. The group emerges stronger from what has been a very challenging year, financially and operationally. With our renewed focus on core markets, gross margin and cost discipline, we are now well positioned to take advantage of our opportunities. The group has a robust order book of 56.1 million at year end, prudently valued and strengthened by some significant post-year-end contract awards in both multi-utility infrastructure and smart metering contracts. We have headroom in our borrowing facility with Lloyds of 4.3 million at year-end, and this, together with future planned asset sales to ESP twice a year, give visibility of future cash flow. Thank you. I'll now hand back to Terry to take you through the sector overviews.
Thank you, Jenny. So the next slides are about our sectors, which, to remind you, are housing, industrial and commercial, smart metering, and maintenance and asset. So the first slide here is housing. So the housing market bounced back in the second half of the last financial year after the lockdowns. So this allowed us to grow in specific geographical areas and to increase the size of the sites that we were aiming for. As I've said, we have a low market share and we're now in a great position to grow with our multi-utility offering. We can bring in the specialisms of Dynamis, and with the Dynamis team, we can now do and install primary substations with design and installation. We can also have support along with ESP with the asset values. And that now means that we can win larger projects than before and remain cash positive throughout. However, the larger projects do have lower margins due to their type and the increased competition. So we must ensure that we grow the smaller projects in both housing and industrial and commercial, as they have higher margins, which will help counterbalance the margin dilution. As I've said, we now have and can offer a full multi-utility proposition from sales, design and installation. So as we move on to the next slide, so you'll see that the blue dots are the housing connections won in year, and the green dots are the housing connections completed in year. And interestingly, if you had have seen these maps over the last 2 years, you would have seen a sharp increase in the projects won and completed in the southwest and the far southeast. and that shows our geographical expansion into those areas. If we move on to the next slide. So this slide shows two of our largest wins made possible due to our multi-utility capability, along with the support by external asset values from ESB, which again enabled us to remain cash positive throughout the project. However, the last project there on the, I'm trying to think, left or right hand side, is Harron Homes. And this really highlights the importance of still working with those smaller, more regional developers, again, to maintain the balance of the margin. So as we move on to the next slide, so our industrial and commercial sector includes EV connections currently. So our three main strategic drivers in industrial and commercial are the growth in EV using our core skill sets, growth in winning and delivering larger industrial and commercial projects, and finally, and very important, the growth of the smaller industrial and commercial projects, whilst offering a full multi-utility to all the customers in these small projects, because again, as I say, they have the higher margins and we need that balance. So EV sales and growth is good, and we're focused on a specific area of the market that complements our core strengths. And as previously mentioned, we are currently creating a focused team due to our pipeline of opportunity. The Dynamis and the FULCRUM Special Projects team, which includes CDS, are now a combined major projects team. This realises the specialisms, but brings them together to enable the larger contract wins, such as FULCRUM, and gives us that full multi-utility capability. Our major projects teams are also winning solar farms, battery storage and generation projects, which complement not only our overall order intake, but as well it increases our involvement in net zero. So as we move on to the next slide, a very similar story to that of new housing. So again, you can see our areas, absolutely we will focus in those core areas, but also where we're expanding into, southwest, southeast, East Anglia and the north. So the next slide is just an example of the width and breadth of our abilities in industrial and commercial, with being one of the only few companies that has the expertise and competence to complete projects such as the super fast charging hub for Fastnet. The other projects there show the vastness of multi-utility projects now being won. The middle project shows true industrial and commercial multi-utility at work. I mean, this is 5.7 kilometres of electric infrastructure, 12.5 kilometres of gas, and 2.9 kilometres of water mains to support the new £85 million large-scale greenhouse. But I'd really like to reiterate something. We do have that very robust bid, no bid process. We must ensure that the cash flows on projects remain positive, the terms and conditions are acceptable to us, and that the margins are also acceptable to us too. So as we move on to the next slide, smart metering. We're now starting to recover from COVID-19. So the lockdowns were obviously causing us issues with regards to entering into people's homes. Again, we have a low market share and we are now in a great position to grow. We've strengthened the team, including engaging a call centre to enable those larger contracts. The large contract won post-year end with E will have a phased mobilisation during this financial year. But these projects won also have recurring revenue with the maintenance and operations of those meters in excess of the meter exchange values. So as I said earlier, there are still 29 million metres to exchange in the UK by mid-2025. And we are seeing an increased activity in this sector. So if we go on to the next slide, again, I do like the dots. Again, this is a great pictorial view of where we are exchanging smart meters. And you will see all across UK mainland, we have exchange contracts in place. Final slide on smart metering. Again, it just shows those two good examples of our success in smart metering. We have the £20 million contract with E, as previously mentioned. It's contracted over 5 years to carry out the exchanges, and we have a phased mobilisation, which will probably take a further 6 months. We are also the meter asset manager, which will see a recurring revenue for all of E's current 320,000 meter portfolio. We're also ensuring that we remain just as vigilant in maintaining existing exchanges and man operations with the smaller customers such as Bright Energy. Again, as I've said earlier, we see this sector as an exciting growth opportunity for us. And not only meter exchanges, but the recurring revenues from being the mop and the man. So as we go into our last sector, so operations within Maintech, our maintenance business, remained strong during the pandemic. And that was mainly due to the nature of the work. And as I've previously mentioned, we ensured that critical customers, including the NHS, were serviced. The nature of the recurring revenues from the maintenance makes this small business an excellent opportunity to grow. And we could also offer maintenance as part of our sales process when tendering for the larger industrial and commercial projects. With regards to our asset business, tranches of the domestic gas assets are still being sold to ESP, but the maintenance and management of the existing gas and electricity portfolio remains a critical focus to us. For example, we still need to maintain the gas safety case, of which we've just recently updated and submitted to the HSE as part of our licence requirements. We see that the retention of our licences for both gas and electric are critical to our future strategy to ensure that we are still able to adopt assets where possible in the future. So again, next slide, we'll see the blue dots are the existing gas assets and the green are the existing electrical. So obviously, due to our heritage, the blue dots are and the gas is quite significantly more than the electrical assets. So we will see a slight demise on the blue dots as we obviously go through the tranches of the ESP sale. So on to the next slide. So this slide gives an example of our specialist high voltage maintenance activity in battery storage. This particular site is in EDF's renewable company, Pivot Power, and is for 2 50-megawatt battery storage facilities in Kent and Oxford. The next case study there is a little unknown asset that we have, which is the high specification gas network to the former Olympic Park in Stratford, whereby we still generate a healthy annual recurring income. So our last slide of our presentation. So to summarise, last year was extremely challenging, as most businesses found. However, we've made great progress in setting our foundations for our geography expansions and upskilling our team to deliver true multi-utility. This allowed us to tender for larger projects, which resulted in significant contract wins post-year end. But we now have a robust process in place to ensure that all new contracts remain cash positive. The terms and conditions are acceptable to us. And more importantly, the margins are in line with our expectations. From Q4, we've had a renewed focus on cash, margin and cost control, not only within our business operations or materials, efficiency, etc., but all over the whole group. And as a business, we've now got a specific focus on headcount. We measure revenue per head, and we are monitoring and managing overhead costs, all to ensure margin enhancement and an improved cash generation for the business. The ESP asset sale tranches also supported our financial strength. We have a healthy, robust but prudent order book that will take us forward. And our capabilities are now set to increase our market share in our core markets while supporting the UK's transition to net zero. Our outlook, as I've said, our foundations are set. We must concentrate on continuing to stabilise our business from the recent changes. But there is still much more to do. And since Q4, we've really been focusing and been busy ensuring that the renewed focus flows into the current financial year. We have incredibly strong market drivers, and that gives us clear, profitable growth opportunities. Thank you, and that concludes today's presentation. So we'll now move on to your submitted questions, and we'll put the camera back on to answer them.
That's great. Thank you very much indeed to you both, Terry and Jenny, for updating investors. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. But just while the company take a few moments to review investor questions submitted, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your Investor Meet company dashboard. We will send you an email to notify you when they are ready for your review. I'd also like to remind you that your feedback is important for the company, and immediately after this presentation has ended, you'll be redirected in order that you can provide feedback so the company can better understand your views and expectations. Terry, Jenny, perhaps I could start off the Q&A with the first question here, which reads as follows. Why have your underlying costs, excluding exceptionals, increased over the course of the last financial year?
Yeah, good question. So in FY21, we invested significantly in stabilising the business and strengthening its foundations. We selectively invested in strengthening our operational capabilities, and we improved our multi-utility abilities too. We recruited top industry talent to join our existing business development and the operational teams. We improved our ability to win larger opportunities, and we did win a variety of new and significant contracts, both in year and post-year end. So this investment was really important in executing our regional expansion and our growth plans too. But as I became the CEO in the final quarter of the financial year, that's when we really looked and introduced a renewed focus on margin and cost discipline to improve the efficiency of the business and, as I said, to really drive the future profitability of the group.
Great. Thank you very much indeed, Terry. Next question is, I would welcome comments in relation to the future expected recovery in gross margins. Do you have an expectation regarding this?
Yeah, absolutely. And hopefully as we've gone through the presentation, so our number one priority is to grow market share, to grow the revenues and grow profitability significantly in the core markets. So for us, and hopefully after the presentation this morning, it's clear that as we do this, we're also putting a significant focus on margin and cost discipline to improve the efficiency of the business to support that future profitability. And we're also being very selective in the projects that we bid for to make sure that they can meet our expectations and profit margins.
Thank you. A couple of questions really around a trading update for the current year. The question reads, can we have a trading update of the current year with obviously within the guidelines of what you can and can't say?
I can take that, Terry. So we can confirm that we'll be releasing a trading update for the current year on the 29th of September, just ahead of the 2021 AGM. This has been added to the financial calendar on our investor website.
Thank you very much indeed, Jenny. Following the board's stance and recommendation against the proposed tender offer from Harwood at 26.25 a year ago, would the CEO please comment on the business sales and profitability performance leading to a current share price reduction of 15% below the tender price?
Okay, so as I've said through the presentation, our focus is on improving the business. And we have a committed focus on cash, margin and profitability to deliver against our strategy and to make sure that we capitalise on the significant opportunities that are there and that are available to us. The share price really is a little bit out of our hands, but we hope that it responds accordingly to the positive action that we are taking and that we're going to take moving forward.
Thanks, Terry. Can the board please comment on the accuracy of the recently appointed house brokers' forecasts of a sale recovery of only 9% versus last year and another net loss of 0.6 million?
So these are our brokers' numbers, and therefore we cannot comment on them specifically. However, I'd say that we are aware of our obligation to say if we thought there was a material difference between these forecasts and those that we expect.
Thank you, Jenny. What are the more near-term net zero opportunities for the business?
Oh, very good question. If we consider that net zero slide earlier, I probably won't get these in order, but smart metering is an excellent growth opportunity. The recurring revenues are phenomenal. So it's not only about the exchanges between now and 2025, but it's also the recurring revenues that go on after 2025 that will really give us that significant opportunity, and that is here and it's now. We've seen an increased demand for the connections to power renewable energy, generating infrastructure and battery storage. Again, we are winning more and more sites with regards to that, design through to installation, and then obviously, as I've said, with maintenance. EV. So as I've said, we now have a confirmed and growing order book for EV. And we're creating a dedicated team. So we've had a dedicated team for a long time that's more sales based. Now the team is sales, it's design and operational, and it all sits within one sphere with regards to the accreditations and what the skills can do. But we're also going to make sure that obviously as that grows, that we have efficiency with that team across the rest of the business. I've sort of mentioned it there, but again, it's not in the boxes of the net zero opportunity, but we also see that maintaining those renewable electrical infrastructure that's being installed by us and by others as another near-term net zero opportunity for us. Again, it's the opportunities are there and that we are taking. We see hydrogen, and that will be a little bit of a watching brief, and we'll watch how that develops further on.
Thank you. Thank you very much indeed, Jenny and Terry. I'd just like to acknowledge questions from Naya, Quintain, Martin, Roger and Will, and of course all your questions we will address, and we'll make these publicly available to all the investors on this call as soon as the management have time to review those, and where appropriate, as I say, we'll publish those responses. So thank you once again to all the investors that have taken time to submit questions during today's meeting. Terry and Jenny, I know investor feedback is important to you, and I will shortly redirect investors to provide you with their thoughts and expectations. But perhaps before doing so, I could just hand back to you just for a few closing comments, and then, as I say, I will then redirect investors.
Great, thank you, Mark. So to conclude the presentation today, I'd just really like to reiterate the following important points. We made positive progress and stabilised the business in the year despite COVID-19. We have a renewed focus on cash, margin and cost to improve the profitability. Now, number one priority is to grow market share, grow revenue and profitability significantly in our core markets. Considering the group's capabilities and position in the market, there are extremely strong market drivers and significant growth opportunities for the group. These are both near-term, and as the UK transitions to a low-carbon economy, we are now better positioned than ever to take advantage of these opportunities. So I'd really just like to thank you all for your time this morning from both Jenny and myself, and wish you a fantastic week.
That's great. Terry, Jenny, thank you very much indeed for updating investors this morning. Could I please ask investors not to close this session, as we'll now automatically redirect you for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of FULCRUM Utility Services, we'd like to thank you for attending today's presentation. That now concludes today's session, and good morning to you all.